Good morning, guys. It's Chris from daxtrader.co.uk. It's Monday, the 3rd of July, 2017, and this is Dax Technical Analysis. Okay, so we've got a start of a new week. We've got 4th July holiday tomorrow for the US markets as well. But we're starting off with the daily chart for this morning. Now, we've already had the break below the ascending triangle formation that's been developing over the last few weeks. Broken to the downside, which was a bit of a surprise, although not to some. It's normally a bullish continuation pattern. A break to the downside can suggest a reversal. And of course, on Thursday, we had a pretty aggressive move to the downside. We're currently looking at testing some support at the sort of 12,400 rough zone. We did pierce it for about 100 points, dug into that on Friday. And we're currently holding just below as we talk right now at sort of 9 o'clock in the morning after a couple of hours of trading. Okay, so as far as opportunities go, we're still above the 200 EMA and we're at the bottom of this Kumo cloud, and we've found some support roughly around about this kind of April high. Well, actually it's not the April high, is it? More like the March high for earlier in the year. No major opportunities at the moment, except for if this does bounce, where could we move up to? And, you know, there's a number of different support levels that you could consider, such as the underside of the 12.5, which is about there. The underside of this trend line, if we continued it and moved it higher. And of course, there was a 725 sort of node on the volume profile. So, looks like a strange drawing. So that's the daily chart. Let's go and take a look at the hour 2 chart. Now this level, or this chart looked pretty interesting to me for a couple of reasons. The first one was last week we broke below the bullish channel to the downside, and we then came back to test the underside of this trend line here, this thick black line, and then reversed or reacted straight away to it and took the sort of 300-400 points off the table. We then have formed this bullish divergence at what could be a zone for a bounce, and we also had an interesting looking candlestick pattern, for candlestick formation, should I say? This one here, this kind of doji, if you can call it that. A couple of tails, which suggest that maybe the sellers are starting to run out of momentum, but you chop it up however you want to. So that one was looking interesting. The bullish divergence for one was interesting to me, because if that is the area that it bounces, it then starts to open up a few target areas to move to. So that's the 2-minute chart. If that was to bounce higher, then I'm going to be looking for price to come back at some point to around about this kind of area, this sort of zone, just to test that 38.2 fib zone at the underside of this level here at 12,550. Somewhere around there could be interesting, providing we can break above that that level there from Friday. Okay, on the 5-minute chart, I took a trade on Friday that didn't work out. I took a long from around 3:15 in the afternoon. So let's just talk behind the reasons for that. So I was looking to find an opportunity to buy, because we've been aggressively selling off pretty much all week, and I've not been trading a great deal because of that, because I've been looking for trades to go long. And now when we had this break move here, I figured to myself, right, well, we're probably approaching the end of the move, just simply because we're stretched. We're already like 3 standard deviations below the Bollinger Band. We're going to need some kind of snap pullback at some point, and maybe this is this penultimate move. We started compressing up into this wedge pattern here, and the break below opened up an extension target. And I thought to myself, okay, so we've got this move for which is probably roughly 70 points, let's say, from the low to the high. So if we extend that down, 70 points, that's probably going to be the end of the move. So maybe somewhere around here was interesting. Then, of course, we had this zigzag type pattern here, and I thought, well, if that's a 2-leg move, then the extension of that move is going to be somewhere around here. And I thought to myself, okay, well, that's good. If we can get into that sort of zone, I'm interested to buy from there. And we had a bit of bullish divergence appear as well. So that was the trigger for me because we were just below the Bollinger Band. We had this divergence. We had a confluence of different technical indicators, and it hit my zone that I'd marked out. So I went long. It didn't work out. I got myself about 5 or something to work. I can't remember actually what the reward to risk ratio was, but I was looking for something quite good. But it got stopped out. Unfortunately, it's just one of those things. I walked away. It did eventually turn around, but wasn't really prepared to hold a trade over the weekend. So one of those things. Now we're currently in the opening range for the hour that we've began, which I think we can probably mark out on a different 5-minute chart here. Here we go. So we're looking to maybe test the high of the opening range from this morning. Break below, a break above that would be interesting. Break below, obviously, for the same reason, because it suggests that we're actually not going to be in a really tight range for the rest of the trading day. And we've kind of started to coil up into a bit of a pattern here. So again, that could be an interesting one to look at, a break. If we do take it out to the upside, it continues that suggestion that we may be having a move to the upside. If we take a look at the volume profile chart, I've marked out an area that I'm looking at for this week, which is 478. And my thinking behind this is pretty simple. I have, let me just clear the chart. I have seen a gap for this morning, and if we assume that the 300 or just above the 300 level low from Friday is the bottom of this move, and that gap in the middle is a balance point, let's assume it's a big assumption there, then we can roughly work out an extension target, which provides us with this area up here at 480 or just below 480 on futures. Let me just check that. 478. Corresponds with this little area up here on Friday. It wasn't the high of Thursday, should I say. It was just a little peak. So I'm watching that to see whether that move completes, because it'll be interesting to see whether this move does turn out to be a balance point. Could also be an opportunity for sellers to sell up here as well if that move does complete, because profit taking will likely happen there. There is a bit of resistance overhead with the value area high from Friday. And right now, we're pretty magnetic. We're stuck on the point of control, the POC from Friday. So we're oscillating around that, we're waiting for that break to happen. So that's an interesting spot for me. The other thing I talked about in the webinar this morning was a potential strategy to use using a 250 volume chart on this ATAS order flow software. The link to get this is below. Now, it is premium software. It's not free. You would buy a monthly subscription to this package, but you can get a free demo if you want to trial it. I highly recommend it. I use this. I think it's great. It's got all sorts of tools in there that will be useful. But just as a basic strategy, recognize that with the 250 volume chart, you can see these kinds of peaks and troughs a little bit more clearly than sometimes a time-based chart will show you. And that will allow us to use an oscillator to get entries when it returns out of an overbought or an oversold zone. And at the moment, if we were looking to try and buy and we'd marked out an area on our charts, then we could use these oscillators to wait for an oversold zone and then perhaps trigger an entry once we're happy. The only thing I can think of at the moment for this one today is that if we do get a break to the downside, I'd like to watch for a potential buying zone around about this sort of level here, 350, 360, something like that, before we move in to go long. Alternatively, a break below these highs could also could be interesting for me as well. So that's pretty much what we ran through in the webinar. We'll do another one tomorrow. We'll try and keep it a little bit more consistent in terms of timing. So it'll be between 8 and 9 o'clock in the morning. Come and join us on the webinar by getting into the Telegram channel to get the link. So hope you make a decent trading day for Monday, and look forward to catching up with you again tomorrow. I'll put this up into the article and we will catch up with you again later on. Take care, guys.